Welcome to the ultimate guide on using social media sentiment in automated trading. In this video, we'll uncover 20 shocking truths that will revolutionize your trading strategy for 2025 and beyond. My name is Pablo, and if you like this type of content, don't forget to like and subscribe. First, let's talk about what social media sentiment is and why it's dangerous to ignore. Emotions control markets more than logic, and social media spreads fear and greed in seconds. Algorithms can read tweets faster than you can blink, using sentiment signals to help bots buy low and sell high. Ignoring public emotion can cost you everything in today's fast-paced market. Now, let's discuss choosing your sentiment weapons wisely. You'll want to use tools like Vader to score tweets in real time, TextBlob to analyze tone and subjectivity, and Monkey for scanning emails and tweets. Sprout Social is great for monitoring finance hashtags. Remember, only pick tools that are trained on market data for the best results. Where does the real buzz happen? We'll explore the platforms that move markets. Keep an eye on X, formerly Twitter, for hashtags like #stockmarket, #trading, and #investing. Use Vista Social to track Reddit's R or Wall Street's. And don't forget about LinkedIn for investor sentiment on stocks. Facebook finance groups can also be valuable, but be cautious with platforms like TikTok unless you're using trained models. Let's talk about how to legally steal the data through APIs and scraping. Use the Reddit API to scan hot comments and the Twitter API to pull tweets with keywords like buy, sell, or crash. Schedule your scrapers to run every 15 minutes. And don't forget to strip out emojis, URLs, and spam before storing the clean text in your database. Preprocessing is crucial. Clean your data or crash your bot. Tokenize tweets into individual words. Convert all text to lowercase for consistency, and remove links, symbols, and irrelevant hashtags. You may need to manually filter out sarcasm or flag it, and keep only trading-related content like SLA or RSI mentions. Now, let's get into scoring that sentiment like a Wall Street hacker, neutral or negative, and let TextBlob assign polarity to comments. Use Vader to rate tweets as positive. Emotional lexicons can help gauge fear or hype. Sort posts by sentiment category before analysis and cross-check scores with trending tickers for accuracy. Tracking mood over time is essential if you don't want to get left behind. Day and week, and spot emotional spikes after major news. Analyze mood changes by hour. Compare sentiment before and after earnings reports, and use dashboards that auto-refresh every 10 minutes. Overlay sentiment trends with price charts for a complete picture. Matching market moves with social media whispers is where the magic happens. Compare positive tweets to stock price jumps and link negative Reddit threads to price drops. Build models that align sentiment and price trends, and watch for mood shifts before technical indicators appear. Don't forget to add event tagging to track news-related emotion changes. Building custom indicators from pure emotion can give you an edge. Create signals using weighted sentiment scores, assigning more value to verified accounts. Merge emotion data with traditional indicators like RSI or MACD, and trigger alerts when sentiment diverges from price. Backtest your new sentiment indicator across different markets to ensure reliability. Not just charts, using high positivity scores to initiate buys and combining negative sentiment with RSI too short can be a game changer. Always test before you wreck. Speaking of backtesting, run tests using past tweets and price data, score historical Reddit threads for market reactions, and simulate how your bot would have traded in previous years. Adjust your trade rules based on test results and save winning strategies for live deployment. Setting trade triggers based on emotions, define sentiment, score thresholds to trigger trades. Avoid trading during neutral or mixed emotions, and fine-tune your thresholds weekly based on market volatility. Using natural language processing (NLP) to read between the lines is crucial to avoid being misled. Apply NLP to detect sarcasm and double meanings, flag emotionally loaded terms, and analyze sentence structure for context clues. Use machine learning to learn from past emotional misreads and cross-validate tone across platforms. Filtering out fakes before they destroy your strategy is essential. Block known spam and bot accounts from your dataset, give more weight to verified sources, and filter out duplicate posts or meme floods. Scan for copy-paste messages as signs of fake hype, and use AI to flag accounts with low engagement to followers ratios, giving more power to the right voices is about quality, not quantity. Weigh sentiment from influencers more heavily. Prioritize posts with high engagement, and track verified accounts for cleaner signals. Avoid emotional noise from new or fake profiles, and let your model learn which voices move markets the most. Turning sentiment into beautiful, money-making charts can help visualize your strategy. Use real-time dashboards to show sentiment swings, highlight spikes in emotional keywords, and sync sentiment data with technical analysis charts. Monitor sudden drops in confidence before price follows, and share visual alerts to trigger bot actions faster. Reacting fast to breaking news is crucial if you don't want to get wrecked. Monitor Twitter and Reddit during breaking events, use tools like Brand24 to track emotional spikes, and react instantly when sentiment flips. After news drops, link keywords to auto-trade triggers and set bots to pause during massive uncertainty. Mixing sentiment with traditional signals creates a killer combo. Pair sentiment scores with MACD crossovers. Use positive emotions alongside bullish candlestick patterns, and ignore signals if sentiment and price don't align. Trade only when both signals say go, and use moving averages to smooth out emotional noise before using real money. Run fake trades to avoid regret. Use paper trading on platforms like TradingView or Binance Testnet. Simulate reactions to recent emotional tweet events, and adjust thresholds when fake trades fail. Test across stocks, crypto, and forex, and only go live when strategies are proven profitable. Measuring the true impact of emotion on your money is key to refining your strategy. Track how emotional spikes match market moves. Use correlation tools to map emotional influence, and build heat maps for panic or hype days. Compare daily moves with keyword surges and find which emotions lead to real profit. Finally, automate everything or fall behind forever. Use cron jobs to pull tweets every hour, let bots auto-tag Reddit posts as bullish or bearish, and schedule regular database cleans. Plug your sentiment feed into your trading bot and never miss a move, even while sleeping. That's it for our ultimate guide on using social media sentiment in automated trading. Remember, the markets are constantly evolving, so stay informed, keep testing, and never stop learning. If you found this video helpful, don't forget to like, subscribe, and share with your fellow traders. Until next time, happy trading.